Now, for an update on the Nigerian market, I'm joined by Jude Anele, who is head of retail banking at Diamond Bank. Good morning, Jude, and perhaps you could start by talking about Diamond Bank. The phrase is that it's standing out above the tier 2 banks, and the strategy has been quite successful. What has been successful about that strategy? Why has it worked?
Yeah, good morning. Thank you very much. Diamond Bank, in the past 1 year, we have retooled and have actually rejigged our operations from the brand refresh that we've done to the operational things we've improved. And I think that what we've done clearly, that we've done in the past, is to watch the way we grow on the asset side and also make sure that we grow the liabilities from the low-cost perspective. So it's a twin strategy of growing carefully the assets and at the same time ensuring that we attract very low-cost deposits to keep our net interest margin wider. And at least we are number 2 in the industry now in Nigeria.
And then looking at the margins on retail loans there, obviously retail is where that action is. Margins have improved there?
Yes, it's improving slightly, but of course there will be a lot of downward pressure on margins as the central bank is trying to pull down interest rate a little bit, though in the last monetary policy committee meeting, it retained the MPR monetary policy rate at 12%. It's been that way for the past year or so. But we think that soon that there will be some contraction in terms of yield for interest margins in the retail space. However, banks can keep it up in 2 ways. One, improve upon your services and transactional capabilities, thereby increasing the transactional flows that go into your customer's account. And once your customers focus more on transactional flows, you find that you get a lot of low-cost deposits in terms of demand deposits. On the other hand, you also improve upon your collections in terms of retail loans. So if you improve on your collections, you find your delinquency rate drops, and the provisioning you make also drops. That also helps you increase that margin or keep it at least constant.
Well, one of the key things in consumer spending is access to credit. And of course, access to credit depends on a good credit rating or a good credit rating system. How far is the economy, how far are the big institutions and lenders in knowing the credit profiles of their customers?
Well, I think like it's done in other jurisdictions, you also learn from experience, especially in the retail space. In this part of the world, it's difficult to have information about customers before you lend to them. So what some banks, including Diamond Bank, have done in the past is to take the risk, lend to these people, and over a year or two, learn from their experiences. And Diamond Bank has done this successfully, and we've learned a lot. So it goes into our analytics in deciding who to lend to going forward. In addition to that, the credit bureaus have also helped. These checks work. So if you have borrowed before in another bank and you haven't paid, the checks will show that up, and most likely the bank will not lend to you. So in terms of analytics, I think banks in Nigeria has improved, and Diamond Bank has put in a lot of investment in the analytics area. And you find that the customers we are lending to are paying up faster, and even those that are not paying up, we are collecting faster afterwards. So I think there's a lot of improvement in that direction.
And let's take another angle of technological improvement, if you like, and that's online retail. In the United States, of course, there's so much that is sold and transported as a result of online purchasing. Where is Nigeria, and particularly those big institutions, in shifting to access to online retail and the controls that go around that?
Yes, I think it's a new area that has come into being in Nigeria. I think in the past 1 or 2 years, especially Jumia, a company called Jumia, has been very successful in that area. And there's Waka now, online retailing in terms of purchasing travel tickets. They're into travel and tours. And you have Konga to also doing the same thing. And what you find happening is that most banks are beginning to key into this in the area of partnership with these companies. You find that banks on their own cannot do that, but can provide a platform and channel and access to credit that can drive that market. So I think it's increasing, but the issue is the way you move these goods around. So if you order for something, how is it going to get across to you? There have been restrictions in terms of movement, like use of motorbikes to transport things. We make things easier. Then you have to use motor vehicles, and there's traffic all over the place. So there's a logistic challenge there. I will think it will ease off as the time goes on.